Fed rate cuts, AI turmoil, and precious metals rally. September has a reputation. It's historically the worst month for the stock market. Traders, analysts, and investors call it the September effect. This year, 2025, markets are facing the same question that has haunted generations of investors. Will September drag stocks down again, or will we finally see a break in the curse? Today, we're diving deep into why this month matters more than ever, with critical events ranging from Federal Reserve decisions and U.S. jobs data to AI-driven earnings, trade war court rulings, and a roaring rally in precious metals like gold and silver. This video isn't just about numbers, it's about understanding the forces colliding right now that could define the market for years to come. Why September matters. For decades, September has consistently been the weakest month for equities. Historically, the S&P 500 has averaged losses of around minus 0.7% in September, making it the only month where losses outweigh gains in the long-term data. Analysts attribute this to a mix of factors: summer vacations ending, mutual funds locking in profits before year-end, and psychological market patterns that repeat themselves across generations. But 2025 brings a twist. Unlike many past years, this September arrives at record market highs. Stocks have rallied on AI enthusiasm, corporate earnings, and expectations of Fed rate cuts. The big question is, will the weight of history pull the market back, or will momentum defy the odds? We'll examine previous Septembers, like 2008's meltdown, 2011's debt ceiling panic, and 2020's pandemic volatility, to understand how unique or dangerous this moment might be. Tariff Court Bombshell. Markets were rocked this week by a stunning legal decision that invalidated most of the Trump-era tariffs. This ruling could force the U.S. government to issue massive refunds to importers, totaling billions of dollars. For corporate America, this is a windfall. Companies that were paying higher import costs may now be entitled to claw back that money, boosting balance sheets and potentially spurring more investment. But it's not all positive. Critics warn that removing tariffs could reignite trade tensions with China, alter supply chains again, and add to political uncertainty ahead of the 2026 election cycle. We'll break down exactly who benefits, who loses, and why this court ruling could be one of the most important economic stories of the year. The week ahead: jobs, earnings, crypto, and AI. The coming week may be the most important of the quarter. The U.S. jobs report is due, a key indicator that could shape the Federal Reserve's next move. If job growth slows and unemployment rises, the Fed may see room to cut rates sooner than expected. If the labor market stays hot, rate cuts could be delayed. Meanwhile, AI-driven earnings will be in focus. Broadcom and Salesforce, both heavily tied to AI infrastructure and software, will release results that could either calm investors or add fuel to volatility. Chinese EV maker NIO and Figma are also on deck, giving us a look at tech's global reach. On the crypto side, rumors are swirling about a potential fast-track approval for new ETFs, sparking bullish sentiment in Bitcoin and Ethereum. The combination of traditional earnings, economic data, and emerging assets makes this week a perfect storm of catalysts. Precious metals break out. While equities wobble, gold and silver are soaring. Silver just broke through a 14-year high, while gold is approaching levels many analysts thought impossible just a year ago. ETF inflows are surging as investors hedge against inflation, volatility, and political risk. Historically, gold and silver thrive in moments of uncertainty, offering safety when stocks look shaky. This year, the rally is being fueled by more than fear. Central banks are buying at record levels. Retail demand is surging in Asia, and Fed rate cut speculation adds momentum. Silver, in particular, has industrial demand from solar panels and electronics, making it both a safe haven and a growth commodity. We'll break down the technical levels, the macro drivers, and what this rally means for portfolios heading into the last quarter of 2025. AI meltdown or AI growing pains? AI stocks that once looked untouchable are suddenly vulnerable. Nvidia, Dell, AMD, and others have seen sharp pullbacks amid news of new competition, particularly from Alibaba, which is developing its own AI chip. At the same time, reports suggest that many corporations experimenting with AI have yet to see tangible returns, fueling skepticism that the AI boom is more hype than substance. But dismissing AI entirely is short-sighted. Its long-term potential remains enormous, with applications in medicine, finance, logistics, and security. The key is distinguishing between hype cycles and durable growth stories. We'll explore whether this moment mirrors the dot-com bust of 2000, when 90% of internet startups failed, but giants like Amazon survived and thrived. Is AI in a bubble, or simply experiencing a healthy correction? The Fed's Crossroads. Hovering over everything is the Federal Reserve. Inflation has cooled from its 2022-2023 peaks, but remains above the Fed's 2% target. Markets are pricing in rate cuts as soon as November, but policymakers remain cautious. If inflation proves sticky or wages accelerate, the Fed may hold steady, putting more pressure on markets. This balancing act echoes the dilemmas faced by Paul Volcker in the 1980s, Alan Greenspan in the 1990s, and Ben Bernanke during the 2008 crisis. Every Fed misstep risks either reigniting inflation or triggering a recession. We'll analyze the possible scenarios, the historical parallels, and the implications for stocks, bonds, real estate, and crypto. What it all means. September 2025 feels like a crossroads. Stocks are at record highs, but history warns of danger. AI stocks are booming and busting at the same time. Precious metals are surging while the Fed hesitates on rate cuts. And now, a court decision on tariffs has added a whole new layer of complexity. For investors, the message is clear. This is not a time for complacency. This is a time to watch the data, manage risk, and stay nimble. Whether September breaks the curse or proves it once again, the lessons will shape the markets of tomorrow. If you found this breakdown urgent, informative, and valuable, hit like and subscribe for daily market updates. Comment below. Will September deliver another crash or finally break the curse? Do you believe AI is in a bubble, or is this the buying opportunity of the decade? And are you investing in gold and silver as hedges against volatility? Your voice matters, and I'll feature the best comments in the next video. Don't miss tomorrow's headlines. They could be even bigger than today's. This is Felix. See you next time.